The power of long-term investing, how to start and succeed. Imagine this, it's 1985 and you've just started investing. For a while, everything's going great. Your portfolio's on the rise. But then, Black Monday hits. The stock market has its worst one-day crash in history, leaving millions in shock. Your friends start calling you reckless, urging you to sell, but you hold firm. Fast forward and the market recovers. But wait, another disaster looms. The Nasdaq nosedives, dragged down by the bursting tech bubble. Yet again, you stay the course while your friends beg you to cash out. Then, in 2008, the global financial crisis shakes the world to its core. Everyone says, this time it's really over, but you persevere, and over time, the market rebounds once more. If all this sounds like an emotional roller coaster, it was. But here's the kicker. The person who started investing back in 1985 wasn't just some story. It was me. And through all those crashes, my portfolio grew consistently at an average rate of 11.23% per year. If I had invested just $250 per month since then, I would have turned that into over $1.8 million. And here's the thing, I invested a lot more than that. This is the power of long-term investing, and today I'm going to show you how to get started too. First things first, you need an investment account. It's easier than ever. No need to call brokers like I did back in the day. Apps like Trading 212, Robinhood, or Fidelity allow you to set up and manage your portfolio from your phone. If you're in the UK, consider a Stocks and Shares ISA, tax-free investing up to £20,000 annually. In the US, a Roth IRA offers tax-free withdrawals in retirement. Let's make this real. I'll deposit £400 right now to show you how easy it is. Apps like Trading 212 offer multiple deposit options, from Apple Pay to bank transfers. The magic of investing lies in consistency. My son has been running a small experiment, investing just £5 into the S&P 500 index daily, about the price of a coffee. Over 3 months, his portfolio has grown 5.03%. To automate this, set up a pie of stocks or funds you want to invest in. Apps like Trading 212 allow you to invest in an S&P 500 index fund, which tracks the largest 500 companies in the US. Think of it like the music charts. Companies rise and fall, but you're invested in the top hits. For beginners, index funds are a safe bet. But if you're itching to invest in individual stocks, focus on their fundamentals, revenue, leadership, and long-term potential. Apps provide detailed financial data and even social features to copy others' strategies. Let's buy some Tesla stock together. I'll walk you through it step by step. Here's the takeaway. Investing isn't about avoiding crashes, it's about weathering them. Start early, stay consistent, and watch your wealth grow over time. If I'd waited even 10 years to start, I'd have missed out on hundreds of thousands of dollars. So don't delay. Click on the next video to see why your net worth can explode after your first $100K, and don't forget to subscribe for more wealth-building tips. See you there.